How about Patrick Parker down in Atlanta with the Fed? I'm sorry, with the Philly.
Killed
The
me.
Philly numbers just came out. Yeah, Philly. We're gonna get those
Yep.
Fed head playing cards printed up and sold because everybody's gonna know these guys'
I love
names
it.
after a while, right? Put them in little bats and helmets and stuff. Anyhow, he said the rates are expected. We should do that. Get your Fed head trading cards right here. Anyhow, um, rising rates have done little against inflation is basically what he's saying. Expect that we're going to see the rates well above 4% by the end of the year. And Fed fund futures are kind of suggesting the same thing, close to it. And now you got Bullard saying maybe December is going to be a little bit bigger than or anticipated. Do you think he's far off from what the Fed needs to be doing here?
Same thing that I've said since the beginning of the year, at least 4.5 by the end of the year. But now I'm looking into the summer of next year and I'm thinking 5.5 to possibly 6%. The big problem, unfortunately, Chris, as we've explained, is that this is the same problem that Burns had in the 1970s, where the government is involved in these big spending programs in order to address large social issues, whether it is poverty or it is climate change or it is the rising energy prices. Same thing happened in the 70s. We had the Great Society. We had the war on poverty. We had the Vietnam War. Burns could never really get inflation under control. So in this environment, I think what's ultimately going to happen, you're probably going to see the Fed move rates higher. The government's going to continue to spend money. And then we're just going to have this kind of a jacked up inflation period for the next 4 to 5 years of 4 to 6%. Fed's not going to be able to get it under control until we have some level of austerity, which I don't believe is ever going to happen. I think we're looking at some sort of paradigm shift right now in terms of the power that the Fed has, very similar to what transpired back from the 1930s to the 1970s. And that's a very difficult environment to, kind of wrap your head around. My argument is stay in energy, stay in commodities, stay in stuff that we need, because those assets will appreciate as inflation continues to roar in this economy for the next couple of years.
So you did and we should sell access to our Slack, I think now. But you put something up in Slack yesterday about the Fed needs to pivot. What do you think they should pivot? I mean, everybody's screaming that the Fed's wrong here, and I'm beating up the Fed has become just a national pastime. But what do you think they should pivot?
The question really was, what would need to happen for this market to find a bottom? And again, the Fed needs to pivot. That's really what it is. Everything is so driven by the central bank's monetary policy. Everybody's hanging on it. Everybody's paying attention to what the Fed is doing. Russell Napier, who was a market historian, said Teddy Roosevelt once said, speak softly and carry a big stick. He said, what does it say when the Federal Reserve is constantly talking loudly? Effectively signals that possibly the Fed has lost control of this entire situation. And as a result of that, we have to look for other opportunities elsewhere and just get used to the idea that inflation will be here for the foreseeable future.
You know what? This brings up something that we didn't put together that we wanted to talk about. It's not the Fed's job to monitor the markets, though, is it? I mean, this is not. They don't care. I mean, they don't care about the market. Two things in their mandate. Tell the people what their mandate is.
To control wages and to control unemployment and to control prices. So price stability. So they use monetary policy in order to impact the job markets. They want to try to maintain full employment. Full employment is 4%. We're at 3.5%. And then price stability is done obviously through through monetary policy of combination of buying and selling assets and raising and declining interest rates. Now, some people in the Fed want to change that mandate to add some additional components to it. That would be insane, because doing so would be highly inflationary. Raphael Bostic was one of those people, but Raphael Bostic may be going away for a while as he did not know that he shouldn't be buying assets that may be impacted by the Federal Reserve's monetary policy.